Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, as well as our co-host, Skyline Corporate Communications Group, we're very pleased you have joined us for our next live presentation from Britvic plc, a global soft drinks company. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Steve Nightingale, Director of Investor Relations of Britvic plc, which trades on the OTCQX Best Market under the symbol BTVCY and on the LSE under the symbol BVIC. Welcome, Steve.
Hi, Matt. Thanks very much for that. And thanks to everyone for taking the time out to join us to kind of go through the investment case for Britvic. Let me just flick through to the kind of first slide. As Matt just said, we are a UK-based soft drinks company, also have a listing on OTC markets. I guess before we dive into the detail of the kind of the strategy and the kind of company and the kind of performance and results, etc., I thought it'd just be worth sharing a quick slide here just to give you a sense of the history of the company. Now, I won't go through all of these boxes in detail, you'll be pleased to hear, but just to give you a sense of Britvic kind of goes back a couple of hundred years when it's kind of created by kind of chemists creating concentrates to flavour water, because the water in the UK 200 years ago wasn't that great to drink. And interestingly, flavouring concentrates is one of our kind of key strategic pillars today. So it's been a constant in our history. If I then kind of fast forward as to the kind of important parts of Britvic, I guess I would go to 1987, where you can see the Pepsi logo there. So in 1987, we became the exclusive bottler for Pepsi here in the UK, and that relationship is still ongoing today. If I then kind of flick forward, we kind of created some of our own brands, like in 2000. We created Fruit Shoot, and I guess the one that's kind of missing off here, this is more of kind of a brand commercial slide, we came to market in November 2005 by way of an IPO. So prior to that, we were part of what was the BAS Group, which then morphed into Intercontinental Hotels, and as you can imagine, we were non-core to IHG, so we were spun off by an IPO in 2005. So from 2005 to where we are today, we've kind of expanded our business. So we were very much a UK-centric business in 2005. Since then, we've expanded firstly into Ireland in sort of 2007. We moved into France in 2010, and then we moved into Brazil in 2015. And I guess you may kind of wonder what's the kind of common denominator across all of those markets. If I go back to my first point around flavouring concentrates, so we are the global leader in flavouring concentrates. So in those markets, the flavour concentrates category is one of the biggest soft drinks category. So to give you an example, here in the UK, our brand Robinson's is the kind of second most consumed brand in the market behind Coca-Cola. So that should give you a sense of just how big the kind of flavour concentrates category is here in the UK. We made a second acquisition in Brazil in 2017. And then in 2020, as we were kind of in the middle of the pandemic, we extended our franchise with PepsiCo here in the UK out to 2040. So I think by the end of that franchise in 2040, would have been the Pepsi bottler here in the UK for 53 years. So I think we can call it a long-term partnership. Alongside that, we've made a couple of bolt-on acquisitions, one in 2021 called the Boiling Tap Company, and then a few months afterwards, we acquired Plenish, which is a plant-based drink. So hopefully that gives you a sense of the kind of history of Britvic. So where are we today with our strategy? So our strategy was kind of updated at the end of 2019, and we have kind of four key strategic priorities that you can see there at the top of the slide. So build local favourites and global premium brands, flavour billions of water occasions, healthier people, healthier planet, and access new growth spaces. And we can kind of dive into those a little bit. So in terms of local favourites, so our brands tend to be number one or number two brands in each of their markets, and they're the brands that we see that I guess they're the kind of the engine, the powerhouse of the business, really. And we'll go into a few more details on some of those brands in a moment. And then flavouring billions of water occasions that I just touched on. So in each of our markets, we are the number one supplier of flavour concentrates. Now, I'm very conscious that in the US, the kind of liquid concentrates market is not developed in the way it is here in the UK. I guess a brand that you would be familiar with in the US would be Tang, which is a kind of powder concentrate. Our brands are liquid rather than powder, and they're actually made from real fruit. There's no artificial flavors or artificial colorings in our brands. And then healthier people, healthier planet. I guess I'm sure with all the companies that you invest in these days, there is an ESG agenda, and for Britvic that's no different. We frame our ESG agenda around people and planet, and we are kind of leaders in terms of calories per serve. So our average calorie per serve is less than 25. And in terms of the planet, in terms of packaging, for example, we've got clear targets out to sort of 2025, 2030 and 2040 around things like carbon net zero, reducing packaging per serve, reducing the amount of water that we use, etc., etc. And I'll be more than happy to follow up on any of those at a later date. And then accessing new growth spaces. So on the previous slide, I talked about Plenish and the Boiling Tap Company. Both of those give us opportunities to move into kind of new categories and new spaces. And it could either be through innovation or M&A. So if you take the 2020 extension, the Pepsi franchise, we took on the bottling and the kind of distribution for Rockstar here in the UK, which takes us into the energy category. So you're likely to see us in our markets to continue to expand into kind of what we see as growth scale categories, either through M&A or through innovation. If we look at our markets, then you can see that below. So, we kind of bucket our markets into three. So the UK is our biggest market, and we intend to lead market growth in GB. In Brazil, we are a relatively small player, but we're kind of looking to accelerate and expand our presence in Brazil. And then elsewhere, global premium brands. So we have two kind of global premium brands, which we try to distribute globally in an asset-light way by finding the right local partner. Our brands there are London Essence and Matthew Tessere. London Essence plays into the same space as Fever Tree, which is a brand that you may be familiar with. And in terms of improving profitability in Western Europe, we'll come on to talk about margins, but our margins in Ireland and France are somewhat behind what they are in the UK. There are some structural reasons for that, but there is a number of strategic initiatives to improve margins in those two markets. And then the enablers at the bottom. I won't go through those in detail because I'm sure they're very familiar to you. So in terms of our strategic priorities, so I just kind of covered the four kind of key areas of healthier people, planet, local favourites, billion water occasions, and accessing new growth spaces. So I'll just kind of touch on our executive team. So Simon Liverland is our CEO, and Simon became CEO back in 2013. So he's now 10 years in the role. Prior to that, Simon was a Diageo veteran, having spent 25 years there. He spent a lot of time in Africa, in Eastern Europe, and then his last role before coming to Britvic was as the MD of Diageo's GB business. Rebecca Napier is our CFO. Just to highlight, Rebecca actually starts at the beginning of September. Our last CFO, Joanne Wilson, left recently to become CFO at WPP, the kind of global media and marketing company. Rebecca joins us from British Airways, where she's been there for somewhere between sort of 15 to 20 years. So we're very much looking forward to Rebecca joining. And then each of our business units has a MD. So we've got Paul Graham, who runs GB and has been there for over 10 years. Kevin's been there for a similar amount of time. Hessel de Jong has been at Britvic for maybe 5-6 years, and he runs our Britvic Tessere international business, which is essentially France, Benelux, and also our kind of global premium markets outside of GB. Ellie joined us recently from Tate & Lyle as Chief People Officer. Pedro runs our business in Brazil. Matt Barwell, CMO. Steve Potts is an MD for Beyond the Bottle. So I'm sure you're very familiar with the kind of strategies of the kind of global beverage companies to sell more beverages in a non-packaging environment. So Steve heads that up for us. And then Sudeep is our Chief Information and Transformation Officer. So where do we operate? So our biggest business is GB. So we've got about 1,400 employees in GB. Brazil, about 1,500 employees. And then we've got other international. So just to be clear, so the markets where we have infrastructure, so where we actually manufacture soft drinks are here in GB. They're in Ireland, they're in France and Brazil. The rest of the blue blocks kind of represent kind of export and partnership deals as opposed to assets in those markets. So just to give you a sense of how big the markets are really. So if we look just to the left-hand side, you can see by volume. So GB is around 71% of our volume, Brazil's 12%, and the other markets rack up to 17%. So by far and away, the GB is our biggest market. And you can see on the far right-hand side there, the revenue by region. So GB is around 68% of our revenue, Brazil 9%. and other international is 23%. So just to give you a sense of, what do we do in our market? So there's a slide here on GB. So these are not all of the brands that we manufacture and sell in GB, but these are our big brands. So starting kind of left to right, you should recognize those PepsiCo brands. So Pepsi, 7-Up, Rockstar, and Lipton iced tea. Just to highlight Pepsi. So in the UK, we are a very unique market for Pepsi. So we are absolutely focused on Pepsi Max, which I believe is known as Pepsi Zero in the US. Just to give you a sense of how successful we've been with Pepsi Max. So when we IPO'd in 2005, Pepsi's share of cola here in the UK was 17%. Today its share is 32%. So we've gone from 17 to 32%. And that's absolutely been driven by our focus on Pepsi Max, which is maximum taste, zero sugar. Likewise with 7-Up, we've just recently relaunched it. Again, our focus is on 7-Up Zero, which is the kind of no sugar version of 7-Up. And as I mentioned earlier, in 2020, we took on the franchise Rockstar. Again, we tend to focus on low, no sugar variants, and Lipton iced tea, which we took on a number of years ago, and we've done a fantastic job with Lipton in the UK. And then on the right-hand side, I've just picked out 4 of our big brands here in the UK. So Tango is a fruit carbonate, so it goes up against Fanta, which I'm sure is a brand that you're familiar with. Fruit Shoot is our kids brand there in a small PET bottle with a kind of purple liquid that plays into the kids space, and it's probably its biggest competitor is Capri Sun. And then 2 of our other big brands are J2O, which is a premium adult juice drink, so it's a kind of combination of flavors, and then Robinson's, which I mentioned earlier, is our flavor concentrate. So that's the number 1 flavor concentrates brand here in the UK, and it goes neck and neck with Coca-Cola in terms of consumption across the UK. Here in the UK, our products are available in all channels. So for us, that means about 70% of our business is in the retail channel. So your Tesco, Sainsbury's, Asda's, Morrison's, etc. And then 30% is hospitality. So we are the kind of sole supplier to the likes of JD Wetherspoons, KFC, Subway, for example, and a number of the kind of big pub groups. So Mitchells and Butler and kind of Fuller's and Young's, for example. So we split 70-30, and we've got 3 factories here in the UK. Brazil is a much smaller business, so we've got 3 factories, covering a country the size of Europe. So it gives you a sense of some of the challenges that you face in Brazil. Our products there are mainly a range of concentrates and juice-based brands, and they're mainly available in the modern grocery and wholesale channels. As I mentioned, we have 3 factories in Brazil. The brands there, our key brands are Maguari, De Fruta, and Bela Ischia. And as you can see there on the left, Fruit Shoot, which was you saw on the previous slide for GB, we've taken after the acquisition, we took that to Brazil, but not as kind of Robinson's Fruit Shoot as it is in the UK, but as Maguari Fruit Shoot. So a strategy of trying to take some of our local brands, some of our local European brands, but kind of localize them for the Brazilian market is part of the strategy. So in terms of Ireland, again, we're the number 2 soft drink supplier. Very similar to GB, we've got a portfolio of carbonated and still brands and available in all channels in the same way as we are in the UK. Again, the Pepsi brands are the same. I've highlighted the kind of unique Irish brands on the right. So Ballygowan, which is the number 1 water brand in Ireland. Club, which is the Irish version of Tango or Fanta, been the competitor brand. And My Waddy, which again is the Irish equivalent to Robinson's in the UK. France, a limited range of non-CSDs, so mainly available in the grocery channel. So we're like 95% of our sales are in the grocery or retail channel. And we've now got 1 factory in France, which manufactures our Tesser and Moulin de Valdon brands that you can see there on the right-hand side. Our brands on the left, Fruit Shoot and Pressade, are actually manufactured for us by a co-packer. So we've kind of reduced our capital exposure in France because we sold 3 factories about 2 or 3 years ago. I'll just kind of after the markets then, kind of before we kind of dive into more kind of recent financial performance, just kind of talk through our kind of capital allocation policy. So as I'm sure you're aware, there is strong underlying free cash flow conversion in soft drinks. It's a very cash generative business. So, we look to invest CapEx, both in terms of organic growth and innovation. So the way to think about our business is CapEx as a percentage of revenue is around 5 to 5.5%. In terms of M&A, we look for value-adding M&A. So we have done M&A over the years, but Simon would be very keen for me to point out that we're in no desperate hurry to do M&A. We don't need M&A to grow, and we will only do M&A where we can see adding value for Britvic shareholders. And then on the right-hand side, dividends. So we have a progressive dividend policy, 50% payout of earnings. And then in terms of our debt leverage, so our net debt to EBITDA, we look to maintain a long-term debt leverage range between 1.5 to 2.5 times. Last year we were around 2 times, so we're in the middle of the range. And then return excess cash to shareholders. So just on that point, we've just announced our half-year results in May, our second share buyback. So last year we returned 75 million of capital to shareholders, which is essentially 3% of capital, and that was on top of the dividend. So we're generating that cash, and where we can't see a use for it within the business or meaningful M&A, we are returning that to shareholders through a share buyback program. So just kind of moving more kind of near term then in terms of last year. So our kind of FY22 highlights. So we had an excellent year. We continue to make great progress across our strategy despite the significant headwinds. As I'm sure you're aware that after COVID hit our business very hard, given our exposure to the hospitality sector. And then more recently, in the last 18 months, we've had the kind of impact of the Ukraine war. I think it's fair to say that we've successfully navigated our way through that. So our strategy has momentum. We've been delivering accelerated top-line growth. Our portfolio of brands has demonstrated its ability to take price and grow value. And we've continued to improve our operational excellence, both in-store and across our supply chain. We've further invested in our brands, innovation, capacity, capability, and innovation. So just to give you a sense of that, so what does that mean in terms of capacity? So in the GB, we added 2 new can lines in the last year, and we've got a small PET line coming this year. And then in Brazil, we've also added 2 additional kind of carton lines into Brazil. So I guess from a CapEx perspective, about 40% of our CapEx is maintenance, 60% is growth. And the CapEx that we're laying down in GB, especially in the last couple of years, is very much to meet demand that we've been unable to satisfy in the last couple of years. I guess led by a highly talented and engaged employee team. Just to give you a sense of some of those highlights, so in 2022, revenue was up over 15%. We saw 10 bips of margin improvement. EPS was up 29%. And our debt leverage was down to 1.9 times. With the dividend and share buybacks, we returned 106 million to shareholders. And when we talked about engaged employees, our engagement score was at 77%, which makes us top quartile. And as I mentioned at the start, calories per serve, 25 calories per serve. And from an ESG perspective, we've seen a 32% reduction in our carbon, and that's against our science-based targets base of 2017. I guess we'll just kind of flick through this next slide as we covered much of that. So in terms of our moving even closer to home, the first half of 2023, which is our half year to the end of March, our revenue was up 7.9%. We saw an 80 basis points improvement in margin. EPS was up 17.5%. And our net debt was at 2.2 times. Now, just to flag, our net debt to EBITDA is always up at the half year as we build capital, build inventory for the kind of key summer trading period. If you look at the consensus numbers for this year, they're anticipating that net debt to EBITDA will be around 1.8 times. So a slight fall in net debt to EBITDA at the end of the year. And that's even with the share buyback. And so far, we've returned 93 million of cash to shareholders through the buyback and the dividend. Our engagement scores have continued to increase. Our calories per serve have dropped, and our carbon reduction has has improved to 34%. So I'll just get to my last slide, which is the Britvic investment case. So, why invest in Britvic? So for us, what we're trying to highlight are the kind of 8 things here on the slide. So we operate in a resilient and growing category. Soft drinks has demonstrated its ability to be resilient time after time after time over the years. If you look back to the GFC in 08-09, the soft drinks category was relatively immune to the kind of downturn. It's very much brand driven. And as I mentioned there, we've got a portfolio of leading brands. We don't really see a big play for private label in the soft drinks category. We also see it as a growing category. So soft drinks is very expandable in terms of its consumption. It's about availability. It's about providing the products for the right occasion. And then likewise, we have a well-invested infrastructure. So I mentioned the CapEx 5 to 5.5%. The long-term PepsiCo relationship is a significant play for us. And we have a committed, agile and engaged team. ESG, as I mentioned earlier, the healthier people, healthier planet. We see that we see that as key and core to our strategy. It's very much integrated into our business. And I guess if I come to the last 2 points, so we have a proven track record of growth. I think if you go back and look at our kind of TSR over the years, notwithstanding the pandemic, we've outperformed the FTSE 250 time after time after time. We've remained very committed to the dividend policy, and we've, say that we mentioned the kind of share buyback, and we're very well financed and cash generative. So we've got long-term USPP debt in place that takes us out to 2035, and a 400 million revolving credit facility that's basically takes us out into the kind of mid-20s as well. So overall, I think clearly I would say this, but we think Britvic represents a fantastic opportunity in the consumer staples space. I'm conscious of the time, so I will stop there and be very happy to take any questions that you may have. So I've just got some kind of questions there that have kind of come through in the chat. So what percentage of your revenue comes from bottling through other parties versus production sales of your own brands? And how does it differ in terms of profitability? So if you take our markets in Brazil and take our market in France, it's 100% own brand. If you take GB and you take Ireland, we sell both Pepsi products and Britvic products. We don't actually disclose the kind of granular detail of that, but to give you a sense of it, it's probably around 2/3 of our GB and Ireland revenues come from the PepsiCo brand. So that would be Pepsi Max, 7up Free, Rockstar, and Lipton Iced Tea. They're the 4 big brands for us. And in terms of profitability, how does it differ? Not significantly, actually, in terms of the kind of profitability. So yes, clearly there is a marginal difference because of the fact that we pay the we buy the concentrates from Pepsi, and that's where they make their products, make their profitability. But it's not as big a difference as you may think. How frequently do you pay dividends is the next question. Twice a year, so we pay an interim dividend, which kind of goes out now. So our half-year results are to the 31st of March, and we pay the interim dividend in July. That typically is 1/3 of the full-year dividend, and then the full-year dividend is paid in February. Next question is, are you working on entering new geographical markets? If yes, by M&A or organically? I think it's a little bit some and some, actually. So from M&A, yes, we would look at new markets. In reality, if we were to enter a new market, it's more likely to be very close to home in terms of Western Europe. So you're not about to see Britvic pop up in Central America, in Africa, or Asia. It's more likely to be M&A through kind of bolt-ons in markets where we have a commercial presence, say in Benelux, for example, but we're not going to pop up in the rest of the world. And then popping up in other markets through partnership. And that is primarily for our 2 premium brands, London Essence and Mathieu Teisseire, where we're looking to kind of globalize those brands. So to give you an example, London Essence is sold in kind of about 30 of the top 50 bars in the world. It's more of a city-by-city strategy in the kind of hospitality sector. Mathieu Teisseire is a premium mixer in terms of it kind of goes into coffees or goes into cocktails, for example. So if you know the brand Monin, for example, those kind of, like for a caramel latte, it plays into that space. And it also plays into the space of providing the kind of liquids as the base for cocktails. So just to give you an example of the success we've had with Mathieu Teisseire in the last couple of years, at half year we announced a listing for Mathieu Teisseire for 2 of the big kind of tea chains in China, which in itself might not sound fantastic, but those 2 chains account for 11,000 outlets. So it's a long burn. So, that we're not making profits on London Essence or Mathieu Teisseire currently, but we do see the opportunity to scale them up and drive significant profit over the medium term. Question here is, what is your long-term annual growth target and how does it compare to the past 10 years? Do you see high dependencies to economic downturn in Europe or other mega trends in taste? So if I take the second bit first, I think in terms of high dependencies on economic downturn, I would say no. So soft drinks is very resilient and relatively immune to a downturn. So if I go back to 2008, 2009, we didn't see any kind of decline in our soft drink sales. And if you look back at the presentations, you can see that in GB and Ireland, we actually continue to grow despite the GFC. And likewise, over the last year or so, whilst volumes have been relatively muted because of the high inflation and the kind of price increases that we've put through, and I guess the well-documented cost of living crisis, we haven't actually seen a switch into private label, and our volumes have been relatively stable. And in terms of kind of long-term annual growth target, so we don't formally give a kind of growth target, but to give you a sense of what our ambition is. So in GB, we talk about lead market growth. So the market is forecast to grow at kind of volumes, kind of 2%, and then probably kind of 1 or 2% kind of price on top of that. So for us, we want to be, our ambition is to be top quartile. So that means growing the top line 4 to 6%. That would be the kind of ambition that we'd go for. Similar for Ireland. France, less so of a dependency on top line growth. It's more likely to be low single digit. The plan in Ireland is to really focus, in France, is to really focus on improving the margins. And in Brazil, it's more likely to be kind of high single digit. And obviously, it's a much more volatile market. So I think if you kind of brickle that together, whilst we don't give a formal target, our ambition will be to kind of grow the top line kind of mid single digit with some margin improvement on top of that, which should then kind of drop through to EPS growth, kind of high single, low double digit. That's the kind of ambition of the business. I'll just pause there because I think I've answered all the questions that are in the chat. So I'll just give you a minute to see if there's any more questions in the chat. No, it doesn't look like it. So thanks very much. What I would say is thank you very much for joining us this afternoon to talk through Britvic. If you've got any follow-up questions, or if I've sparked any interest in Britvic, please feel free to either get in touch through the OTC Markets team, or if you drop onto Britvic.com, so that's www.britvic.com, and then go to the investors page. There's a contact detail there. Otherwise, the OTC Markets team will be very happy to kind of share my personal contact details, and I'd be very happy to follow up either on email or jump onto a Teams or Zoom call. So